This one's going to be a short, snappy update on ICP because ICP has done something exactly the same as what we'd said needed to happen in the previous video. So this is going to be a follow-on, and we're holding that high-low structure whilst, guys, remember, simplicity is the key, whilst the stochastic has done full swing back into oversold. It's oversold. We're holding the higher low. Now we're going to look at what needs to happen next for ICP and how to play the next move. Okay, so remember, guys, simplicity is key. Trading doesn't need to be hard. We're looking at a couple of indicators. We're looking to identify a couple of things that need to happen and how you play the next move on the back of that. So if we just clear up the chart, we understand that we're holding the higher low structure. I'd said in the previous video that what we want is a build-up of price action at this level. Whilst that's happening, your stochastic is pulling back whilst maintaining the higher low structure. So that's full swing. That's happened. That's a tick. That's exactly what we needed to happen. So the next thing that we're going to do is stick on our Fibonacci to find out exactly what levels are sticking points, what levels we need to hold, and what needs to happen for a breakout to occur. So firstly, Fibonacci retracement tool from this swing low here to the swing high up here, including the wicks. And you can see that we fell through the 61.8% retracement, but that was met by a short bounce. Now today, just zoom in on that, you can see that we're trying to fight back and regain the 61.8. 61.8 sat at $5.06. So the aim of the game in the short term is to hold the $5.06. Aim of the game in the midterm is to break this trend. So we're going to stick the diagonal on there. The diagonal tells us one thing. Once you break that, there's a high probability that the low is in. We don't know the low's in yet because we're in a downtrend. We've lost the uptrend. We're in a downtrend. It's a tick that we're holding the 61.8% retracement. It's a tick that we're putting in a higher low structure whilst we've gone full swing on the stochastic RSI. So this is all good. This is all positive. Now, for a high probability move, you need to understand one thing. You need to understand who has got control at any given time. At the moment, we can see we're in a bearish trend. We're putting in swings to the downside, lower highs, lower lows, lower highs. It's starting to cool off here. And the aim of the game, guys, in the short term is to ensure that we don't break and we don't close below $4.86. If you do break and you do close below $4.86, we know where the next support base is going to be. It's going to be 78.6% retracement, $4.73. Clues look left. Was that previous support? Yes, it was previous support. So we understand that that's going to be the next barrier. That's the worst case scenario while you're in a downtrend. Now, what happens if you're coiling up and you're doing something like this and you're coiling up as you're getting towards the trend line and you're getting towards the trend line, you're waiting for that breakout. When you're waiting for that breakout and you're maintaining this structure here, that means that the bears can't push price further down. Bears can't push price further down. You're holding the higher low. This is the important thing. Now, for the high probability move, you really need to know who has got momentum. And when the bulls have got momentum, it's going to be a crack of trend for the first time in this downtrend here. So once you've got that, you understand that there's a high probability. This is where the trading comes in, guys. This is where the risk management comes in. Once you've got a break, you understand you've got a high probability that this is the previous low. Where you're shooting for depends what your strategy is. Shooting for the previous high, that's the least risky one. You're shooting for the previous high, that's a 2.33 risk to reward. How can you improve that? It all depends on the swing. It all depends on the break. So you can get something like this. How do you play that? You wait for a pullback. Once you wait for a pullback, that brings your risk down. It increases your reward. What happens if it's something that's a little bit smaller like this? A small break, because these can be tricky ones. These can be tricky ones. And this is where sometimes you can get a fake out. So if you've got no volume that's backed up by the break and you've got a little one here, what tends to happen, guys, is you do get some form of a retest. You understand that that's the low. There's your risk management, but expect price to come back down a little bit more. And if price comes back down a little bit more, what does that do? If you waited for price to stabilize, that would bring your risk down and increase your reward. Look what happens, guys, by just bringing it down 5.02. So these are all hypothetical things because we don't understand exactly what the swing is going to be like, how big the break's going to be, what the retest is going to look like, if it's going to be a quick retest. That's why you need to start paying attention and understanding exactly what level that you want to enter this move, how long you want to be in for the trade, how are you protecting yourself? Are you in for a midterm from an investment perspective? Are you looking to trade it in and out? You need to be asking yourself these questions, guys. So we're waiting. This is all bullish at the moment. We're waiting. And what we're waiting for, once we get this big break and once we take back this 200 daily moving average, which currently sat at $5.80, that's when we're looking for this big swing here, firstly, which is from where price is now, all the way to the top of this wedge, 162% to the upside. Where did I get that projection? Zoom out, zoom out, zoom out. You can see this wedge pattern here goes all the way back to 26th of March 2022. We've been in this descending wedge, we've been in this descending wedge, and this is the bear market. This is the long accumulation phase. This grinds people out, and this lasts for around about 3 years. And once you get a break of that, that means that the bulls have got momentum in the macro, the higher time frame, for the first time in 3 years. That's when you'll see an acceleration. The acceleration point, $34.61. Where did I get that projection? Conservative projection, guys. I've discounted the whole of this wick. I've used my Fibonacci tool from this lower high here, from that lower high here, and then I'm measuring a 38.2, a conservative 38.2% retracement, and that's where I'm coming out with that number, guys. I'm not bothered about the 61.8. I'm not bothered about the 78.6. I'm not bothered about any swings above that, guys, because this is the move that I'm trying to catch. That's the move that I'm trying to play, and I'm not being greedy about it. So let me know in the comments what you think. Let me know in the comments what you want me to cover next. Big thank you to my 10,000 subscribers. Appreciate each and every single one of you. Get yourself in the Discord. Have your say on what I'm going to cover next, guys, and have your say if you've got any questions that you want to ask me. This is where I can be most responsive in the Discord. It is completely free, so you might as well get yourself in there. All right, goodbye from me.